How's it going, everyone? In today's video, I'm going to share with you a trading strategy that you can use on gold in order to pass your funding challenges. In this video, I'll walk you through a structured, data-driven approach to trading gold that has helped countless traders achieve funding success. In this video, we are going to cover topics like time frame alignment. We're going to cover market structure shift, order blocks, how we use these three elements combined in order to take entries, and after we've taken entries, how do we actually manage the trade? So if you're struggling with any one of these different topics, this is the video that you want to watch, because I'm going to cover each and every one of them in detail and show you exactly how we put all of this together in order to take high probability trades. So first up is time frame alignment. What is time frame alignment? It is aligning different time frames in order to take the same trade or look at the same opportunity. If the higher time frame, let's say the weekly, is trading bullish, and you enter your trades on the 5-minute time frame, how do we take entries on the 5-minute if we start using the weekly as a first time frame? That is time frame alignment. So if the weekly is bullish, how do we align the weekly to the 4-hour? Now, if the weekly is bullish, we are going to wait for the 4-hour to turn bullish as well. When the 4-hour is bullish, we have the weekly and the 4-hour in alignment. Now, if you want to use a lower time frame than the 4-hour to take your entries, you're going to use, you see here, the 4-hour. We are going to use the 15-minute time frame in order to take our entries. So if the 4-hour is bullish, we are going to wait for the 15-minute time frame to align to the 4-hour as well and also be bullish. That is when we can take a trade. And if you want to take it one step further, you can take it on the 1-minute time frame, because we can see here that the 15-minute, here we have the 15-minute, that aligns to the 1-minute. And so, but that is 4 time frames. I don't recommend doing more than 3 time frames. So if you want to trade on the 1-minute time frame, I recommend starting your analysis on the 4-hour time frame. If you want to trade on the 5-minute time frame, I recommend starting your analysis on the daily time frame, because we can see the daily aligns with the 1-hour, and the 1-hour, here we have the 1-hour, and that aligns to the 5-minute. What I don't want you to do is use time frames that are next to each other. So if you want to trade on the 15-minute time frame, do not look at the 1-hour time frame. We skip one and we use the 4-hour time frame. So I want you to take a screenshot of this or write this down, because this is the correct time frame pairings that I want you to use. In this specific strategy, we are going to be using the daily and the 1-hour time frame pairing. You can try this on other time frame pairings, but just please make sure that you use the correct pairing. Here we have the correct pairings. Make sure that you use the correct ones. But again, for this specific strategy, we are only going to be using the daily and the 1-hour time frame. Moving on to the next topic, which is market structure shift. We are going to be using market structure shift in order to confirm a trend reversal. Now, what is a market structure shift? Here I have a bearish example, and here I have a bullish example. But before we jump to the charts, I want to draw it out for you to explain it even further. So a market structure shift is when we change from a bullish trend to a bearish trend, or a bearish trend up to a bullish trend. We always have a shift in market structure. Now, in a trending environment, we want to see price make higher highs and higher lows. For example, here we have a high, and then a higher low, a higher high, higher low, higher high, higher low. That is pretty self-explanatory. Now, if we are going to continue bullish, I want to see this pattern repeat itself. So I want to see the market continue making higher lows and higher highs. If that doesn't happen, what is the next thing that's going to happen? If we fail to make higher lows, we are going to make a lower low, meaning we are going to have to break the previous higher low. So if we get something like this, we have failed to continue with the trend, and we have broken market structure. Here we made a lower low because this low is lower than this low. That is also known as a market structure shift. Now we went from a bullish environment to a bearish environment where we make lower lows and lower highs. Here we have a lower low, lower low, lower low. Here we have a lower high, lower high, lower high. So that is also known as a market structure shift or a shift in structure. And in the same way, that was a bearish example. In a bullish example, we want to see the market making lower lows and lower highs, and then break that structure to make higher lows and higher highs. So here we have a low, lower low, lower low, lower low. Here we have higher lows, higher lows, higher lows. So we have broken market structure to the upside to confirm the shift in structure. That is known as a market structure shift. Now in these two chart examples, here we can see we have a low, here we have a high, here we have a higher high, higher low, higher high, higher low, higher high. Now, which swing low made this swing high? If we follow price action down, we can see that this swing low here created this swing high. So our market structure shift is only going to get confirmed as soon as we close below this swing low. And this candle here closes below that swing low. That confirms my market structure shift. And you can see we went from a bullish environment to a bearish environment. In the same way, here we have a bullish example. We have a high, lower low, lower high, lower low, lower high, lower low. Now, if this structure were to continue, we would see lower lows and lower highs form. But instead, we broke structure. Now, if you look at the lowest point of price action, which swing high created this swing low? If we follow price action up, we can see that this swing high clearly made this swing low. Now, as soon as we break and close above that swing high, that confirms my market structure shift. And now we can see we go from a bearish environment up to a bullish environment. That is when my market structure shift has been confirmed. The final thing I want to talk about before we go into chart examples and show you how all of these elements fit together to form the strategy is order blocks. What is an order block? An order block is consecutive candles that takes out liquidity that gets closed above. Now, in this example, we can see that we have 1, 2 green bullish candles that takes out liquidity, and as soon as we close below the opening price of these up close candles, that is your change in the state of delivery. Now, I don't want you to get confused with change in the state of delivery and order blocks. It is exactly the same thing. A change in the state of delivery is the process that forms an order block. So I might use change in the state of delivery, or I might say order blocks. Please don't get confused. It is the same thing. Now, as soon as we close below the opening price, not the wick low, the opening price. Why do I use the opening price and not the wick low? Because which price formed these up close candles? It wasn't the wick. These candles formed when this green candle opened. Now, that is why we use the opening price. As soon as the opening price gets closed below, that forms an order block, and which will propel price and push price lower. In the same way, here we have 2 down close candles. So which price do we use? We use the opening price of these consecutive down close candles. As soon as we close above, that is our change in the state of delivery that forms this order block, and we can see that price action draws back into it and pushes price higher. Now, why don't I use this as an order block. That is an up-close candle. The reason why I don't use that as an order block is because that is within the higher order, the bigger order block. I don't care about little candles inside of this range. I only care about this range. In the same way, we have this little down close candle that is within the higher order block. I don't care about opposing candles within this range. I only care about the candles that formed the range. Here we have two consecutive large candles that forms this range. And we can clearly see when we trade into the opening price, we repel price higher. Here we can see as soon as we trade into the opening price of this range, we reject it and we trade lower. Those are the order blocks. I don't want you to focus on these candles that is within the higher, bigger order block range. That doesn't matter to me. Quickly, before we move on to live examples, if you are looking to get mentored by me and have me trade live with you, check out the link in my description. We have people signed up that is getting funded, getting payouts. People are busy changing their lives. And you can go ahead and get 10% off on lifetime access using code LIFETIME10. You will learn the exact strategies I use to get funded and fund my personal account with payouts, so I no longer need to rely on prop firms. I trade my personal capital. You can choose between a monthly or lifetime membership. You have access to a private Discord that has content uploaded to it daily. And you can, if you are struggling to get funded, you can trade live with me on a weekly basis. I trade live 3 times a week with my students, and they are busy getting funded and getting payouts. Look at the benefits from the program. And if you don't want to believe me, just go ahead and look at the reviews that this program is busy getting. People are getting prop firm payouts. People are changing their lives. So if you are looking for a no-nonsense trading, education, and mentorship program, go ahead and check out the link in my description and you can become my next success story. I don't promise you the moon. I don't promise you to get rich overnight. Trading is a long-term journey and I'm here to walk it with you step by step every single day of the week. I have made multiple 6 figures from trading and I've been trading for more than a decade, where 3 of those years I've been trading full time. I know the ins and the outs of the market. So how do we put everything together to form the strategy? Now, the first thing I want you to do is I want you to go to the daily time frame. On the daily, I want you to mark out all the swing highs and swing lows. So we are going to mark out this swing high and we are going to mark out this swing low. We can also mark out this swing low, and here we can see that we have relative equal highs that was taken out by the market. Now, so because these highs has been utilized, we no longer need them. We need swing highs and lows that has been unmitigated. What that means is price action hasn't engaged or interacted with it yet. We haven't traded through it yet. So those are the swing highs that I want you to mark out on the daily time frame. Here we have the 1 hour time frame. On the 1 hour, that is your entry time frame. So mark out the swing highs on the daily and then you drop to the 1 hour time frame. On the 1 hour time frame, let's say we have this swing high here. I'm just going to drag that along. So let's say price action is busy trading up to this swing high. Now I've zoomed in over here. Over here, we can see that we're making higher highs and higher lows, and then we interact with this swing high. What I want you to wait for now is I want you to wait for your market structure shift. So we have a high, higher low, higher high, higher low. Now, we are going to wait for the higher low to get broken and closed above. Closed below, my apologies. So, to simplify that, in an uptrend, I want you to look at the highest points of price action. And then I want your eyes to look at the bearish wicks. Which swing low created this swing high? In this example, it is this swing low. So that is where I want you to wait for the market to break and close below. That confirms your market structure shift. What I want you to do now is the second step. I want you to mark out the order block. Remember the order block? Our order block is the consecutive up-close candles that took out liquidity. Now, it might be from this low to this high. It might be from this low to this high. We are just going to mark out the consecutive up-close candles or bullish candles that took out liquidity. So here we have our order block. I'm just going to pull that along. Now the entry. I want you to take your entry at a retest of the order block. Stop loss above the high. And I want you to target a 2R. That is going to be your setup. Now, as soon as we trade into the order block, your trade gets triggered and whatever happens, happens. You can go ahead and move your stop to break even at a 1 to 1 or a 1 to 1.5 to 1. So I recommend using a 1.5 to 1 to move to break even. But you can do it at a 1 to 1 or a 1.5 to 1. That is up to you. But for this example, we're going to move to break even when we hit 1.5 to 1R. That is where we move our stop loss to break even. So here we are on the first example on the daily time frame. Remember, I wanted to mark out swing highs and swing lows. Here we have that swing low, here we have a swing high. Now, I want you to go ahead and mark out the swing high and the swing low. And we wait for price action to trade through one of them. In this example, we can see that we take out the swing high. So we are going to be looking for sell opportunities. Now we are done with the daily time frame. Now we drop to the 1 hour time frame. And guys, this is how easy it should be. Trading shouldn't be difficult. Trading isn't difficult. Now, here we see that I want you to look at this. If I can just get this to work. Okay. Here, this market here hasn't taken out the swing high yet. So we don't look at this price action. We only look at price action here because that is when we take out the swing high. Now we are looking for a market structure shift. If we look at this highest point of price, which swing low made the swing high? If we follow price action down, we can see that this swing low made the high. Now this is my valid market structure shift. So if we continue to trade higher, our market structure shift point will move up. Here we can see we trade down and then we go back up. So our market structure shift point moves up. This swing low made this swing high. Now we are just playing price ahead. Now I want you to look here. Do we close below? No, we wick below. That is not valid. We need a body closure below. And do we trade higher? Not yet. And there we go. Here we trade higher. This is the highest point. So this swing low made the swing high. And here we can see we close below. So we have a valid market structure shift. Now, this can be a little bit difficult to see, but which up close candle took out liquidity? Here we can see we take out liquidity. Now we have this green candle. This is my valid order block. This is my order block. Now we do have a market structure shift and we have a valid order block. So that is where we take our trade from the order block. Stop loss goes at the high and we target a 2R on this trade. We let price play forward. We see we are tapped into our position and price action is busy running down. Now, as soon as we hit 1 to 1.5, which is here, this is our 1 to 1.5 zone. That is where we go break even. So we move our stop loss to break even and we let the market run and do its thing. And we are taken out of our trade. So here we have a winning position. I'm going to mark this with a green arrow. Here we have a winning trade. Now what do? We go back to the daily time frame. Here on the daily time frame, what do we do now? Now I want you to mark out again, we mark out the swing high, and we go ahead and we mark out the swing low, and we wait for price to engage with them. We play this ahead, and let's see, price action takes out the swing low, so we drop to the 1 hour time frame, and we look for a market structure shift. That is it. Here we can see we have this low. This swing high here made that swing low. So that is my valid market structure shift. Unless we trade lower. Here we trade lower. So my valid market structure shift point moves down. Now, we just wait for price action to do its thing. Here we close above it. So here we have a valid market structure shift. Now I want you to mark out the order block. Here we have 2 consecutive down close candles. That is my bearish order block, my bullish order block, excuse me. Now, what do? We wait for the market to trade back into it. Stop loss goes at the low, and we target a 2R on this trade. Remember, we go break even at a 1 to 1.5. So I'm just going to go ahead and mark that out, and full TP at 2R. Let's see how this plays out. We get tapped into our trade here. This retests the order block, and let's see how price action plays along. Here we run up to our break-even point, and we are out of our trade. For those of you who said, oh, price action never tapped it, if I zoom in, we can see that this wick traded into our order block, so this is a valid winning trade. We go ahead and we mark that out with a green arrow, and we can delete our drawings, and we can go back to the daily time frame. Guys, this is also how you backtest a strategy. So we mark out the low, we mark out the high, and we wait for price action to take out one of them. We take out the low, so we drop to the 1 hour time frame again. Here we can see we've taken out the low. And do we have a valid market structure shift in this area of price? We don't, because we needed a closure above this high in order to confirm a valid market structure shift. But now that has moved to this high. So let's see how price action plays along. Now, do we trade lower? We do. So our market structure shift moves down to this high. This becomes my valid market structure shift point. So let's see if we get that shift in market structure. We don't, and we trade lower. So this moves down lower. Do we get a valid market structure shift? We don't. We trade lower, so this moves lower. That is how easy I want you to use to make your trading. Do we close above? Yes, we do close above. So we have a valid market structure shift. Where is my order block? We have 2 consecutive down close candles. That becomes my valid order block. And that is where I want you to take your trade. Stop loss goes at the low, and we go ahead and we target a 2R on this trade. Let's see what happens. Price action taps our order block and takes us into the trade. Let's mark out our break-even point. Here I go break even. And let's see how this plays out. And we are out of our trade. Here we have another winning trade. So go ahead and mark that with a green arrow. Let's go ahead and delete all of this. And what do we do now? Now we go to the daily time frame again. So now we mark out our swing low and we go ahead, excuse me, and we mark out our swing high. And we wait for price action to do its thing. What happens here? Here we take out our swing high. Going to the 1 hour time frame. I've moved this forward a little bit too much. So if we look at price action here, we can see we take out our swing high. Here we have a valid market structure shift. And here we have our valid order block. Price action never came up to retest this order block. So here we have a missed trade. And that is trading, guys. You're not always going to get your trade. But in this example, we have 1, 2, 3 winning trades with one missed trade. So let's see if we can get another trade. Playing this ahead, what do we have? Here we have a valid swing low. Here we have a valid swing high. So we are just waiting for the market to take out either side of it. Here we have another valid swing low. Let's see if the market can take it out. The market takes out our swing low. And so let's drop to the 1 hour time frame to see what happens. If I just pull this back, here we can see that here we have the swing low. This swing high made the swing low, so that is my valid market structure shift. Where is my valid order block? We have 2 consecutive down close candles that forms my valid order block. That is where we take our trade on the retest of the order block. Stop loss goes at the low, and we target a 2R with break even at a 1 to 1.5. So this is where we go break even, and here we have full TP. Let's see how this trade plays out. And there you go. We are out of our trade with another win, marking that with another green arrow. Where is my arrow? Marking that with a green arrow. And there you go, back to the daily time frame. And here you can see, in a time span of, 40 days, a little over 2 months, we have 1, 2, 3, 4 winners with one missed trade. That is 2, 4, 6, 8% trading, swing trading the daily in the 1 hour time frame. This is how easy I want your trading to be. Trading shouldn't be difficult, guys, and that is exactly what I focus on in my trading mentorship. I simplify trading in a step-by-step manner for you so that you can do this with your eyes closed. Trading shouldn't be difficult. Guys, I hope you enjoyed today's video. I hope you found value. Please go ahead and backtest this. Let me know in the comments, what are your win rates? How are you finding the strategy? How are you liking the new videos? And I'll see you guys in the next video.